Well, I think part of the problem is that, it's 2018 and we're still asking consumers to provide pay stubs when a lot of the information is digitally available. Let's say I work at Vandelay Industries and I make $5,000 a month, and then that gets direct deposited into my bank account. That means that bank has a trusted record of that income stream that a lender should be able to go and verify. And that's what Blend does. We help lenders use that technology so they don't have to go and manually read pay stubs, manually key it into systems, which is both not even fraud, but also an error-prone process that could lead to other defects as well.
Fair enough, by the way, and get that Penske file finished as soon as you can, by the way. I got the reference. But isn't digitization and technology at least part of the problem in a sense where there aren't a lot of mortgages, that are approved? Isn't it digital? You just plug in numbers and it spits out, it's a robot or artificial intelligence reading it. So if you just plug in the right set of numbers, you're probably going to get approved.
Yeah, and I think that's where we should use data and use the ability to find trusted sources of information like direct deposit streams, like payroll providers and directly from employers, databases, so that the consumer isn't providing that information, so that it can't be altered or doctored, or even just have a mistake be made, and then use that to make the decisions done in real time.
Diana, how convincing are these forgeries, whether it be the actual pay stub or if I were trying to verify somebody's employment, if I made that phone call? I mean, I would think that I'd be able to determine if that was a fake person or not in terms of working at that particular company, saying that Brian earns $6 million a year.
You don't know.
Well, look, we talked to a mortgage broker about this, and they said, yes, you can go and verify this data if you, cross the T's and dot the I's and do everything. But I'd be interested to know from Nima, we're also looking at not just the borrowers committing this fraud, but also some of the wholesale people, that is the mortgage brokers who package these loans and then give them to lenders, get all your information. Also a big increase in fraud risk among that industry. That is, they say it's because there's so much fewer refinancing that they need more business, so they're actually committing the fraud and the borrower may not even know. Are we seeing that as well?
I think that the process is going to be just as manual and just as analog, whether it's for the brokers or for the loan officers or for the consumers. And so the way to solve that is, and I think, yes, technology is definitely part of the problem to the question earlier, because people can go and generate a fake pay stub and do all these things on the internet they couldn't do 10, 20, 30 years ago. But technology also could be part of the solution here, where if we can get the brokers, the consumers, the loan officers, the agents, everyone access to their own data, and provide that data to the lender in a trusted way that can't be doctored, then that completely prevents any sort of custody issues around the data as well.